home, you always want to make the right mortgage choice. So stick around. I'm going to drop some knowledge for you. I'm Ray Williams from the Mortgage Maestro Group, and today I'm going to unleash top 5 insights comparing conventional loans to FHA loans. Stick around to the end. I got some tips for you on how to drop your interest rate and improve your overall cash flow when buying a house. First, we're going to talk about down payment. FHA generally wants a 3.5% down payment, and it will allow you to jumpstart buying your first home. Conventional loan, some people still think you need 20% down, which is just not the case. You can do it with 3% down. There's even an option for 1% down, all things considered. That could be pretty intriguing for your situation, so check into that. Credit scores. FHA, you can get going with a 580 credit score, but talk to the lender because your interest rate could be affected with that credit score on an FHA loan. Conventional loans, you want a 620. Again, same thing. Conventional loans are much more tied into your credit score and your interest rate. Number 3, debt to income ratios. FHA has a higher tolerance for debt to income ratios, as high as 57%, built off the fact that FHA believes that first timers will spend more money towards buying a home than other debts. Conventional loans, the guideline, 43%. All things considered, we have seen approvals up to 49%, but this is where it gets a little slippery. So you want to make sure that that lender is doing their diligence for you if you have a higher debt ratio on a conventional loan. So keep that in mind. Before I get into the pros and cons, don't forget to stick around until the end because that's where I'm going to talk about saving money on your mortgage. Number 4, pros and cons. The lower down payment comes with a mortgage insurance. So an FHA loan, it's going to be there, guys. It's part of the mortgage. It's the life of the loan. Permanent is relevant to the amount of time you hold the loan. With a conventional loan, it can be removed without refinancing. So keep that in mind because that can certainly save you a lot of money. But on a conventional loan, your credit score will also have an impact on the insurance known as P insurance in your payment. Number 5, property plans. FHA is great when you're buying your primary residence. A conventional loan is needed if you're buying a second home or an investment property. Now, one of the coolest things though about FHA, if you're buying a 2 to 4 unit and you're gonna house hack and rent out the other units, FHA, you can do it with as little as 3.5% down, and you cannot do that with a conventional loan, folks. Now, that tip to optimize the interest rate and save on your cash flow. Affordability is a big factor right now. Payment, if you got credit cards or a car loan, maybe you want to think about putting less money down and paying off these consumer debts. Paying off the consumer debts can do a few things for you. Here you are. You can raise your credit score, which would reduce your interest rate on a conventional loan. Improve your debt to income ratios, again helping you qualify for more home, which then enhances your monthly cash flow. So when buying a house, cash flow certainly can become important. And by doing all of those things can reduce your overall cost of interest. Because remember, cost of interest is not just on the house, but hoping you found this information really helpful. Like the video, subscribe for more wealth building tips about home ownership. I'm Ray Williams. I'll talk to you on the next one.